Hi, this is Jared Rogers from Beyond Accountancy. Today, I want to talk about the RBA's interest rate announcement because I feel like they're telling us that penguins can fly. What do I mean by that? Well, if you have a wrong idea, you get a wrong conclusion. So, birds can fly, penguins are birds, so penguins can fly, right? So, if the premise is wrong, that all birds can fly, then the conclusion is wrong. So, how does this relate to the RBA? Look at the announcement they made earlier in the week. They decided to increase the cash rate to 4.1%. That's an increase of 25 basis points. So what does that mean? That if you've got a mortgage or another loan that's variable, then most likely your bank's going to pass on a 0.25% increase to your rate. What they're saying here is this further increase in interest rates is to provide greater confidence that inflation will return to target. So what is the logic of the Reserve Bank? Inflation is caused by too much spending. If you want to read more about that, technically it's a good article on Rate City, um, explaining why. So inflation is caused by too much spending. That's what I think is the false premise. Higher rates mean bigger loan repayments. That means households and businesses will have to spend less because they've got a bigger mortgage repayment. They've got less left over for spending. Therefore, the rate increases will stop inflation. But the issue I have with that is two things. Firstly, people think, oh, interest rate rise is just an economic thing. They're not deliberately trying to make it hard for households. Well, actually, they are. This logic says that it's too much spending in households, wage growth is strong, things are okay. They actually are trying to put pressure on households. So they're deliberately making your life harder. It's not just a coincidence or a side effect, right? Um, but secondly, is inflation caused by too much spending? Is it not caused maybe by the billions of dollars in money printing in Australia and all over the world? Is it not caused by the supply chain problems caused by lockdowns? So money printing and lockdowns, both government decisions. That's what's driving inflation. So if that's correct, that money printing is a big or the main driver, then stopping people from spending by making their lives harder isn't going to cure inflation. It's the penguins can fly fallacy. So what can you do about it? Where should your rate be now, right? So the interest rate you pay depends on a couple of things. The LVR, which is your loan to valuation ratio, which is how the banks, one of the main ways they work out if you're a high or a low risk loan, and the loan purpose, so home loan or investment loan. So at the moment in Australia, home loans are cheaper than investment loans. So what's LVR? So loan to valuation ratio. It measures how big your loan is compared to the property. So if your loan is $500,000 and your property's worth $1 million, that's 50%. You own 50%. The loan is 50% of the total. Higher LVR means a more risky loan, so a worse rate. So this table probably summarizes it a bit better. So if your LVR is under 60, so the bank owns less than 60% of your property, that's considered a low risk loan, and that's where you get the best rates. 60 to 80, you get okay rates. Over 80 is considered a high risk loan, and that's where we're seeing the worst rates. So if you have a very low amount of equity or a high loan compared to the property, that's where the rates are the worst. Where should your rate be now? Well, this is before any rate rises were passed on. And this is just general overview of the market, right? So you're looking about 5.4 on a low risk loan, about 5.5 for a home loan, 5.75 to 5.8 for an investment. So that middle one's where a lot of people are, and that's where you should be. But let's add 0.25%, right? Let's assume the banks pass on the increase. So your par score for a home loan rate would be about 5.75 and somewhere around 6 for an investment. There's that psychological thing where something's $10, the shop will charge $9.95, and the banks will probably do something similar. So you'll see a lot of 5.99s, I reckon, for some of these rates, but 5.75 and around 6. If you haven't reviewed your loan in a while and you've paid it down and your LVR is healthier and you're under that 60 or even under 70 for some banks, then you could be getting a better rate. So just you want to check that. Easiest way to evaluate where your loan is at is to go to the website of the bank you're with and just see for your LVR and for your loan size, is the offer they're giving to new customers what you're getting? If it's not, call the bank or call your broker. Now, the bank doesn't have to give you the new customer rate. They've got no obligation to lower your rate to what they're offering new customers, but you may as well ask. So you won't necessarily get a yes. If they won't play ball, then you can say, well, I'll shop around instead, because they're not obviously that keen to keep your business. So the second thing you can do is shop around. So if your mortgage rate starts with a 6 for a home loan, you need to call your broker. You might have a 6% loan because you've got a high LVR, but ignoring that, home loans, even in the current market, shouldn't start with a 6. You should be able to find a deal that starts with a 5. And the third thing you could do is consider a private loan to cut out the bank. So how does that work? Well, it's a typical your Gen X 40-something mortgage holder paying 5.75%, and then maybe your boomer dad has got some cash in a term deposit of 4.5%. So what can we do with this private loan? Well, the obvious thing is to pick a rate in the middle. You might, instead of having that money in a term deposit or a savings account, they might lend it to you, park that money in your offset account. And there's a few advantages of this. So firstly, it's win-win, right? Both parties are winning. Sometimes people are like, well, I don't want to borrow money from my dad because you feel like you're not self-sufficient or standing on your own 2 feet. But in this scenario, you're both doing each other a favor. You're both winning. The second advantage is you could use the debt to reduce your LVR. So say you're on 75 and your bank offers better rates at 70 for LVR, you could just reduce the capital of your loan by getting a permanent loan from a relative and then refinance at the better rate. And so you're winning by saving the gap here, but you're also winning because your overall rate on the rest of the loan is lower. The other thing I'd say about this is, in terms of making the agreement, you can buy a loan agreement template online. It might cost you $100, well worth the money just to formalize that this is a loan and not a gift. That's really important, especially when there's potential for divorce or bankruptcy or other things like that. You don't have to, but a good idea is to make the agreed rate RBA cash rate plus X. So rather than saying the rate is 5%, you can just say it's the RBA cash rate plus 0.9. So then if rates go up next month or if they drop next month, then the private loan moves with the change in interest rates. So what's the summary of all this? The government thinks penguins can fly, but what can you do about that? Well, firstly, jump on your bank's website, compare that to the rate on your most recent loan statement or in your internet banking app. Shop around if your mortgage starts with a 6 and consider a private loan. So a lot of you don't know that I'm now a qualified mortgage broker. I got my diploma earlier this year, and I can help with that in conjunction with the mortgage broking company that we've been using for a few years. So if you need help with home refinancing or even planning the purchase of a first home or a next home or seeing, can I afford a rental property, all those sorts of questions, that's all a free service we can offer. And you can get in touch with us in the usual way via my direct contact details if you're already a client, or if you're seeking to become a client, you can contact us via the website. So I hope that was helpful. Hopefully you can find some way of saving either by refinancing or using a private loan, some sort of advantage from this video, and hope you enjoyed it, and I'll see you again next time. Okay, bye.